Good morning, everyone, and thank you so much for this opportunity to give you this presentation today. So I don't think it's a surprise to anyone here in the auditorium today to know that farmers have been feeling a squeeze over the last decade with rising input cost and unpredictability of market prices. It's really hitting hard on farmers' profitability. Today I would like to speak to you about where the missing rand might be and how data and innovation is helping some farmers to find it. So even though official inflation is within the target range of the South African Reserve Bank between 3 to 6%, input costs such as electricity, fertilizer, insecticide are rising higher than inflation. With that as well, we are seeing that national fresh produce market prices are not rising as fast to cover this input cost increase. Extra increases such as Eskom tariff hikes and interest rate increases is putting further pressure on farmers' profitability. So inflation affects everyone, but in farming it doesn't just eat into income. It erodes both your cost base and profit margins. So here we compare the CPI with the agriculture inflation over the last decade. Agriculture inflation is a lot more volatile than general inflation. It ranged from minus 1.8% in 2019 to a whopping 14.6% in 2016 and 14.6% in 2022. This is directly related to droughts and global supply issues as well as raising input costs. Planning becomes nearly impossible when your input cost structure changes so dramatically within one season. If we break down this input costs into key inputs, this breakdown shows the annual percentage change of these input costs. While in 2023 and 2024, we saw some relief, with cost being 43% lower than it was in the peak of 2021 and 2022. It is still 50% higher than it was in 2019, with fertilizer remaining between 54 to 95% more expensive than it was 5 years ago. So even if inflation feels lower, we're still operating at a much higher cost baseline than before. So let's look at what that means for the farm's profitability. Real potato prices have remained basically stagnant, averaging around 54 Rand, 79 Rand per 10 kg bag over the past 20 years. Nominal prices increased just over 6%, which is barely keeping pace with long-term inflation of 5.5%. The results? Farmers are earning more rands, but those rands buy fewer goods. So the big question, if real prices haven't improved, how are farmers still surviving or even thriving? This is where innovation steps in. While looking at yield improvements' impact on the cost per 10 kg bag, we are seeing some relief. Thanks to improvements in cultivars like BP1 and Mondial, average yields have risen by 10 to 15% since 2010. Resistance to diseases like late blight cut losses by up to 20%. Drought-tolerant varieties are now being used in 30% of seed plantings in dry regions, and better tuberous shelf life has reduced post-harvest losses by 10 to 12%. These gains reduce the cost per 10 kg bag. So even if total production cost rises, innovation is helping to buffer the bottom line. But production isn't the only lever. A farmer's price can collapse simply because too much produce arrives at the same market on the same day. Market's ability to remove potatoes off of the floor has an impact. Full markets lead to falling prices. We saw that in 2024 alone, a full market led to 11% lower average price for farmers. An empty market on the other end of the spectrum led to a 20% increase in average prices. This is why informed marketing strategies can unlock as much, if not more value than the extra ton per hectare. And how is this data available? The Potato SA app has a daily monitoring of volumes, stock level, prices for all markets across South Africa. The app provides daily morning and afternoon updates, as well as weekly market summaries. From your phone, farmers can adjust delivery timing to avoid oversaturated markets. This is actionable, real-time data that gives producers a new edge. So in closing of the idea is, even though inflation is under control, input costs are rising faster and harder. Real selling prices are flat, but yields are helping to spread costs across more bags. Cultivar and yields are protecting the margins, one bag at a time. And access to real-time market data is empowering smarter pricing and logistics. So the missing rand is not just on the farm, it is found in informed, data-driven marketing decisions. Thank you so much.